Joining us now to discuss is CoinDesk's research analyst, George Kaloudis. George has written an article about Bitcoin miners as part of CoinDesk's Tax Week coverage. George, welcome to the show.
Hey, Dominic. Good to see you. How's it going?
Good to see you too. Now, briefly walk us through your framework for determining miner profitability. Any interesting findings, especially regarding the cost of mining?
Yeah, and I know this has been said many times by many people. Before I say anything about Tax Week or this tax revenue modeling exercise, I want to say how weightless my words feel given the gravity of everything else that's happening in the world outside of our little bubble. So that said, here at CoinDesk, we have theme weeks where we publish an onslaught of articles about big, important themes in the world of cryptocurrency. And this week is Tax Week, so we are writing about the world of taxation. And I published a piece for our research team that went through determining the amount of potential tax revenue that the federal government could potentially expect from Bitcoin miners in the United States. The way we did that was model out the level of profitability of miners in the United States and applied a federal corporate tax rate of 21% to that level of profitability, which sounds simple in practice, or in theory, but in practice is somewhat difficult. To do that, we leaned heavily on work done by our friends at Galaxy Digital Research, a leading crypto research firm that wrote a report called "How Much Does It Cost to Mine a Bitcoin?" And they open sourced their model, which is an awesome thing that they have done. And the model laid out the profitability of mining Bitcoin based on the type of mining equipment being used. And since there are varying efficiencies related to each type of machine, but their model was focused on equipping companies that are looking to set up mining operations. So we simply took that and tried to apply it over the entirety of the network, tweaking the input cost based on our assumptions of electricity costs in the United States, which is generally higher than in other countries, and the rules around depreciation schedules to get to a number. That said, and I will caveat that our model had a big wide-ranging numbers that it showed. If you look at public mining companies in the space right now, you actually notice that they don't really pay any taxes now, and that's mostly due to the startup nature of these businesses. So last part of our model, that's sort of this an assumption, is that we're operating in a more mature mining environment in the United States. And from there, the most interesting finding is that depending on the performance of the Bitcoin market and network, we can expect to see a significant amount of tax revenue due to the United States. We could just as easily see that tax windfall shrivel away, though, to zero if the market tanks too much, right? And I know it feels like a bit of a cop-out, but our range of scenarios showed tax revenue as high as almost 800 million, as you can see on the chart over here on the right, but all the way down to zero if the price of Bitcoin tanks and Bitcoin hash rate goes up to 300 exahash. There's going to be no profitability, so there's going to be no tax revenue that comes to the United States.
Got it. So very price sensitive model, right?
Absolutely.
And, I see that US has about a 30% share of the global hash rate, which is pretty impressive. So help us understand how miner profitability can contribute to a potential tax windfall.
Yeah, the US has really stepped up following the exodus of mining from China, right? There's certainly a world where US hash rate ticks up even more, which will only improve the potential situation for tax windfall for the United States. I would point out, and I've already pointed this out earlier, it's slightly more expensive to mine in the United States than it is in most other countries, and definitely China. China has very cheap energy sources. That's because the main cost input for mining is electrical cost, and that tends to be higher here. However, in a world where hash rate chases price increases, there is a world where $100,000 Bitcoin leads to an insane near-term profitability for these firms, and the ones who are set up already to take advantage of that are the ones who can profit in the near term, because it takes time to set up these operations. So given the construction of the Bitcoin network, you can actually expect profitability to then trail off in the long term as incentives encourage miners to join the network to eat up that profitability. So the US would be best served setting up a situation where you could have miners set up now to take advantage of potential price increases in the future. And potential. So in that case, more hash rate coming to the US is probably good for the US from a tax perspective.
Got it. And in terms generally over the distribution of mining activity, where else other than the US are you seeing an increase in mining?
So people have been kind of coalescing to the Pacific Northwest, where there's a lot of cheap hydroelectricity. I saw an article recently that people are actually looking towards Georgia, near where I used to live in Atlanta. So that's kind of an exciting thing, but it's really, and we see Texas, of course. Texas lawmakers are encouraging miners to step in there, and given they're on their power grid that is within Texas only, they actually have a lot of incentives there to have them be there in order to boost up their grid there.
Got it. And given this potential tax windfall, could U.S. lawmakers perhaps encourage miners to set up operations right here?
Yeah, of course. And I hate getting political, but taxes are intimately tied to the government. And I certainly count myself as a Bitcoin proponent. So of course, I think this. I think mining can have a profoundly positive effect on the electrical grid, which is advantageous for politicians to latch onto as they bid for either a re-election or an election cycle. Increased revenue due to encouraging onshore business creation is something that people on both sides of the aisle can get really excited about. So while I hate playing politics, this seems like a win-win-win for either side of the aisle.